All right, welcome to this explainer. Today, we're going to break down the fundamental and technical data behind Robinhood's massive recent stock surge. We are going to look under the hood, yeah, pun absolutely intended there, to help you see the full picture of what's actually going on with this company right now.
So Robinhood just popped 13% in a single week. But if we zoom out a bit, the stock is up an astonishing 80% year-to-date. Literally 80%. If you've been watching the markets at all lately, you have definitely seen this ticker flying across your screen, and it is catching a ton of attention from retail and institutional investors alike.
But this really begs the million-dollar question, doesn't it? Is this a sustainable, fundamental turnaround for the brokerage, or is it just another retail trap waiting to catch lay buyers? In this explainer, we're taking a totally objective, 360-degree view of the data. Look, I'm not here to give you direct financial advice, but I am here to arm you with the facts, the charts, and the underlying business metrics so you can make the smartest decision for your own portfolio.
Okay, let's just dive right in. Here's our roadmap for today. First, the bull case. Second, the bear case. Third, technical analysis. And finally, the playbook and our final verdict. Starting off with Section 1, the bull case. Let's look at why exactly Robinhood is rallying so hard right now.
The whole narrative around Robinhood has just completely flipped. Think back a few years, it was basically viewed as this crypto one-trick pony, right? But looking at this breakdown, crypto is now only about 20% of their revenue. The other 80%, that's coming straight from a really rapidly growing equities and options business. They've rolled out their new gold card, they've introduced retirement accounts, and it's working. These features are doing exactly what they were designed to do, which is successfully attracting stickier, much higher net worth users to the platform, rather than just everyday day traders.
And really, that revenue diversification is just one of three massive pillars driving the current bull case. Look at number 2 there, sustained profitability. Robinhood has actually posted 4 straight quarters of positive net income and real free cash flow. This is a massive pivot from 2022 when they were just burning through cash like crazy. And then we have number 3, which is arguably the biggest macroeconomic tailwind out there, Fed rate cuts. History tells us for sure that when the Federal Reserve cuts interest rates, retail trading reliably spikes. Cash gets off the sidelines, out of those low-yield savings accounts, and straight into stocks and crypto. So Robinhood is perfectly positioned as the ultimate proxy for this retail resurgence.
All right, shifting gears to Section 2, the bear case, because there are definitely some sobering risks here that you simply cannot ignore.
We've got to do a quick reality check on the actual price tag here. We're looking at the forward price-to-earnings ratio, which is basically how much you're paying right now for the company's future growth. Robinhood is currently trading at a multiple of over 50. Compare that to a legacy, established competitor like Charles Schwab, which is sitting at a much more grounded multiple of 15. What this immediately tells us is that at current prices, you're paying a massive valuation premium for Robinhood. The market is basically pricing in absolute perfection and rapid future growth. If that growth slows down even a little bit, well, a multiple of 50 leaves a whole lot of room for the stock to fall.
And look, beyond that kind of stretched valuation, you've still got major crypto dependence. Yeah, it's only 20% of revenue now, but let's be real. If Bitcoin crashes, historical data shows Robinhood's stock usually crashes right down with it. We all remember the movie we watched in 2022, right? Bitcoin tanked and Robinhood stock dropped 80%. Finally, the competition and regulation in this space are just fierce. Rivals like Fidelity and Schwab are actively copying Robinhood's sleek app experience, while platforms like Webull and Public are competing aggressively on cost. Plus, looming over the whole shebang are regulators continuously circling their primary revenue model, payment for order flow, especially on the crypto side.
Moving on to Section 3, technical analysis. Let's step away from the fundamentals for a second and actually map out the chart.
So the absolutely crucial point here is understanding these exact levels. The stock right now is hovering around 45 bucks. Just above us, we've got a really heavy resistance zone between $48 and $50, which perfectly aligns with the 52-week high. Now, if Robinhood can get a clean, high-volume breakout above that $50 ceiling, we could easily see a short squeeze that sends the price running fast up to $60. On the flip side, though, if the stock rejects and falls, our major support zone is sitting between $38 and $40 right on the 50-day moving average. If it breaks below that $38 floor, the chart is heavily suggesting a pretty quick technical drop down to $32.
To give you guys a bit more context on those levels, we need to look at the Relative Strength Index, or RSI, which measures the speed of these price movements. Right now, it's sitting at 68. That means the stock is getting pretty overbought. It's not quite at extreme panic levels just yet, but it tells us the momentum is running incredibly hot. Chasing the stock right here carries a lot of risk, which suggests that waiting for a natural pullback toward the $42 level is going to provide a much safer entry point with a better margin of safety.
Which leads us to Section 4, the trading playbook. We're looking at 3 distinct investor strategies to tackle this.
Here's your potential path forward depending on who you are as an investor. If you're a momentum trader, the play is likely looking for an entry around $42 with a really tight stop loss, specifically targeting that $48 to $50 resistance zone. That gives you a very solid 1 to 2 risk-to-reward ratio. Now, if you're a long-term holder looking out 5 to 10 years, please do not chase this 80% rally. Set some limit orders down at $35 and $38 and just dollar cost average over the next few months. Robinhood is a high beta stock, meaning it's highly volatile and exaggerates whatever the broader market is doing. You're going to get opportunities at better prices. And finally, if you're a conservative investor, just remember that Robinhood is not a core anchor holding. Keep it to a 3 to 5% max portfolio allocation, and make sure you're pairing it with stable, broad market ETFs like VO or SCHD to balance out your overall risk.
All right, let's wrap this up with Section 5, the final verdict. Let's get to the bottom line here.
Looking at Wall Street's broad consensus, the average analyst price target for Robinhood right now is sitting exactly at $52. From our current price of $45, that implies there's still about 15% upside left in this current run. But you've kind of got to take that with a grain of salt, because the estimates from different institutions are wildly all over the place. We're talking everything from a super bearish $30 target all the way up to a deeply bullish $70. Honestly, there is very little true consensus on Wall Street about this right now.
So the big takeaway is this. Based on blending both the fundamental and technical data, Robinhood right now is a hold. At $45 with an RSI pushing 68 and a forward PE over 50, it is simply not a clear-cut buy. But that underlying fundamental momentum also means it's not an immediate sell either. The most objective takeaway here is patience. If you already own it and you're sitting on big profits, hey, consider trimming some of your position as it approaches that $50 resistance. If you don't own it yet, just wait for a dip back down to that $38 support level to add. Whatever you do, don't blindly chase the green candles.
And if you are chilling on the sidelines right now, definitely mark your calendars. The absolutely crucial catalyst to watch is happening in exactly 4 weeks. Robinhood is going to release its earnings and, most importantly, its monthly active users, or MAU data. This specific metric is literally the lifeblood of the bull case. If they miss their active user targets, well, history shows this stock could easily suffer a 10% swing overnight, which could provide exactly the volatility and pullback you might be waiting for.
And that pretty much wraps up our deep dive into Robinhood's data. So, I gotta ask you, leaving you with this final question. What is your move? Are you buying the breakout, selling the rally, or are you just waiting patiently for that pullback? Let me know your strategy down in the comments below. I really hope this explainer gave you a clear, structured view of the landscape, but please remember, always do your own research before deploying your hard-earned capital. Stay focused, stay objective, and I'll catch you in the next explainer.